Okay, the next one, and I know that this is new for most of y'all, unless you're a pretty advanced price action trader. It's called a flagpole pattern. So this is by far one of the most profitable trades. This is my most profitable trade setup. I made 17% or 20% within like a month or two off of Burlington. I actually have that chart markup next using this pattern. This one shows up pretty frequently and it's very reliable, great risk to reward ratios. So how you can find this pattern, this is actually STLD, this is Steel Dynamics. This is what I bought like a couple days ago due to Trump's tariffs. If you're interested in learning more about this particular trade, check out the podcast that I released. It will cover the economic reasons why I bought this trade and also these technical markups. So the first thing that we're going to look for is what's called a flagpole. It's comprised of kind of a jolt of multiple weeks. You can see that there's no downtrend. This is on a weekly chart. You can see right up here, this is on a weekly chart. So these are massive time frames. So it went from about 24 bucks all the way to about 40, a top of 40 within, a month and a half, which is a pretty great move. So this is our flagpole because it can just go straight in a straight line, almost like a pole, right? Y'all see that? Okay, and then it's also followed by a consolidation period. There's some people have different rules for this. I just look for it not to pull down. I use Fibonacci retracements. So I look for it not to retrace more than 50% or the pattern's not accurate to me. So this one, as you can see, just stay and consolidated. It can go down at an angle, it can go down a little bit steeper, but what you want to look for is at least 4 periods. So I would want to see that this stopped consolidated for at least 4 weeks, which would be like here, which is really small. Usually they're going to be symmetrical. So if you have a nice month and a half run, you at least want to see a month and a half consolidation. So after you see this consolidation, you're going to want to take a position either down here at the bottom of the consolidation. So right around here, you can block this trade pretty reliable with a low risk to reward. You would have just placed your stop loss below here. I like that approach. You can also take the approach of buying it whenever it breaks out of the flag pattern, and then your stop loss would be below this consolidation. Again, these are one of the highest probable. They show up all the time in stocks. You might just want to flip through. Again, you need to train your eye to see these patterns. They're not going to just jump out at you. You need to go back and study or just Google flag pattern, price action, and look at the pictures, and they're going to mark up the charts for you. And eventually your eye will be trained where you can just spot these things like that. You're going to be zooming out and you'll be like, that's a flag pattern, or something like that. So any questions about this setup, real quick, before I go?
The 4 periods, is that just something personal that you do? Or?
It's personal, plus I actually got that number from a highly respected technical trader. I can't remember the guy's name. He ran a hedge fund, and he used technical analysis as part of his strategy, and this was one of his favorite technical patterns that he used. So you just want to see consolidation, right? This legitimately looks like a flag. Would you all agree? Yeah. So you just want to see something that kind of resembles that. And you might have a flag that, this kind of looks like there's a lot of wind, right? Like it's fully extended. You might also get flags that, on like days that there's no wind, for instance, you might get something that kind of hangs lower, like this. So this is a bullish flag, and the reason you can tell it's bullish is the direction of the flagpole. So you can also have bearish flag patterns, which go the opposite way. So they would go down like this, consolidate, maybe going up or sideways, and then they would break down again. Does that answer your question, Jonathan? Any other questions before I move to the take profit, where you expect the stock to hit? Okay. So your take profit, is based off of your flagpole. So you can see, I'll actually go back so y'all can check this. I should have pointed out before switching slides that I just basically took this the flagpole length and laid it at the very bottom of this consolidation. As you can see, it came up and touched right here. You saw massive taking profits. These are all technical traders who took profits on this trade. This trade would have been a 55% increase in the span of 2 months, 3 months. I mean, that's a pretty good return on position. The higher time frames that you go on, the more reliable the pattern is going to be. So if you're looking at an hour-long flagpole or flag pattern, it's not going to be nearly as reliable as a day flagpole or a week flagpole. I personally like to use the day and week patterns because I'm a swing trader. So again, I'll go back. Pay attention to the 1758. It's really important that you understand that the take profit is based off of the flagpole, and you're just going to place it at the bottom of the consolidation point. So let me go back just so you can see that I didn't mess with the numbers or anything else. Again, 1758, exactly the same length as the flagpole, and then I'm just going to place it at the bottom. Right there, 1758. You can see it was hit perfectly to a T, and then people started taking profits. Any questions about this pattern before I continue?
Can you just say once more with the length about the flagpole?
Yeah, okay. So how you're going to do your take profits. Take profits is a term that I use for when you should look to exit the trade technically. So you're going to look at the length of the flagpole. Because it started right here, and the flagpole ran all the way up to this point before kind of coming down and consolidating. I just take the length of this flagpole from the bottom here up to the top of the flagpole. And I'm just going to take that entire thing right here and move it to the bottom of your flag pattern. Does that make sense?
Yeah.
Any other questions? Yeah, the next one is actually a live trade that I took of this pattern, and you can see that it was profitable. This was a call that I made on Burlington, which is a discount retailer. I made this call on January 19th, 2017. We'll talk about building credibility a little bit next time, especially for my advanced members. You should come Thursday and we'll talk about how to build credibility as a trader. I think it's extremely important. Just as you would go in, I'll give you a little sneak peek, just as you would go into a tattoo artist, you would never let somebody tattoo you who never had kind of a book showing their work, right? You should take the same approach as a trader. Nobody's gonna ever hand you money if you don't show or showcase your abilities, right? So one way that you can do that is by taking pictures and writing up an analysis of a trade that you think is gonna happen. Which is what I did with this one. So I saw this nice long trend line. You can see some simple moving averages that I even included on here. I think this is the 250-day moving average. And I made a call. This is a Fibonacci ratio or Fibonacci cluster that I found. We'll talk more about Fibonacci's maybe next period, I'm not really sure. But you can see the nice flagpole from right here all the way up to here, right?